What's going on, everybody? It's Joe here. It's time to trade and get paid. Before we get into it, I want to ask you, what did you think about that last video? We talked about fair value gaps, hidden gaps. We talked about imbalance, and I gave you an easy, simple strategy that anybody could make money. I told you that I was going to give you 3 strategies that anybody could use. Big account, small account, beginner, intermediate, advanced, it didn't matter who you are. These strategies are going to be for everybody, and you will be able to win with these strategies. The first one was the fair value gap, the hidden gap, the imbalance, and it was very easy. This one is gonna be even easier. Like literally, you thought that was easy? This one is ridiculously like elementary. Very easy, anybody can do it. And if you have a small account, this is how you're gonna be able to flip your account, make profit, and get yourself in position to become a professional trader. So if that helped you out, the last one helped you out, this one's gonna be even better. Make sure you hit that like button, comment below and let me know what your thoughts are, and subscribe and help us push this content out to more and more people. I'm gonna see you on the chart right after this intro. So let's jump into it. This easy strategy for anybody to use is going to be a simple trend following strategy that is going to position you to make sure that the move is on your side, okay? So it's going to be very easy, couple simple steps, follow the steps and it will work for you. Make sure you do it exactly like I'm showing you on the screen. So with no further ado, let's jump into it. So the first thing we're gonna do is we're gonna start on the 1 hour chart. We do top-down analysis, and in this particular strategy, we're gonna go from the 1 hour down to the 15-minute chart. We wanna know what the multiple time frames are doing and how they work together. So let's talk about that. So 1 hour chart shows that we had an uptrend going in here and that we started to go sideways and now have developed a downtrend. Now, one good thing to do is always look left, right? Always kind of zoom out. And you can see that we're in an uptrend, but then now you can see that a downtrend has started. We have a high, a low, a lower high, and a lower low. And then not only that, but here's a little pro tip for you. It's not just when you have the highs and the lows. It's when now you see within the structure of what we see, we are also now seeing, number 1, a strong reversal point. Number 2, structure within structure. So now we see that and we're ready to start looking for down moves. So the first little thing in this strategy you're gonna have to understand, we are, many times I've told you, you can trade with or against the trend. It doesn't really matter because at some point everybody's trading against the trend depending on what time frame you're on. What I'm trying to tell you in this particular strategy for, this easy strategy for everybody to do is that with this one, rule number 1 is that you're only gonna trade with the trend. So because we're seeing downward movement, we are only going to look for sell opportunities. We're not gonna look for buys, we're only gonna look for sells. And this is confirmed because when we look out, you kind of see here where we have this double top and we just are in this area where we're breaking the neckline. So we see a confluence, we see an area where we're looking for sell opportunities. And at that double top, we do see a downtrend forming. So that gives us the idea on this 1 hour chart that we should be looking for sell opportunities to come, possibly all the way down to the bottom, but we'll get to that in a minute. So now that you have this 1 hour downtrend started, what we're gonna do is we're gonna look at previous structure, and what we wanna see is the most recent little touch, and that's right here. So if you can see here on the 1 hour chart, we have this little area right here where price came down. I do a little trick called wicks and bodies, all right? So what I'm gonna do is I'm going to take a line and I'm gonna drop it on them bodies right there, and then I'm gonna take another line and I'm gonna drop it on that wick, just right there, just like that. Maybe put it right on that body right there, just like that. And there you go. So now this tells us that we have an area of resistance that was support is now gonna be resistance. But the first thing we're gonna have to do is we need confirmation. We can't just arbitrarily just pick anywhere we see a resistance or a support. We need to see, is it confirmed? So when we look left, do we see structure? So I'm gonna ask you that. When we look left, do we see that that is a respected area? If you said yes, you'd be right. So we have respect in this area all the way across. You see that it's a strong area of support that has now been broken with volume right here. So we're looking really good, okay? So now we know we don't really need the past information anymore at this point just yet. Now we're gonna focus in on what we see here. So we have this structure, high, low, lower high, lower low. We're looking really good. And then we have this zone. So what we're gonna do now is we don't want to trade a sell position. We don't want to take a sell position when price is too low. What we want to do is we want to let price come back up to us. We want to let it come up a little bit. So what we're going to do is we're going to let price come up back to our zone area, because every time when you see that, especially a strong support like that has been tested over and over again, we're going to see that price, when it breaks, is going to come and retest that. Most of the time, majority of the time, price is going to come back and retest what used to be a support is now going to become a resistance. What used to be a floor is now going to become a ceiling for us, and it is going to help push price down. Once we have confirmation, now I know aggressive traders, breakout traders would have wanted to get into position right here. And that's fine. If that's you, if you're a breakout trader and you're real aggressive, especially for scalpers, go ahead and do your thing. But this is a 1 hour chart. So what I want to do is I want to let the 1 hour chart come back to my zone area, and I want to find, is there an opportunity for me to get a better entry for a sell position? So another little thing that we can do is we can look and see, like we can adjust our lines a little bit and see, do we see other areas of confluence? Like for an example, where the volume started. When we got the breakout, if you look at that breakout candle, you can see here that at the top of that candle, if you look left, look at my dotted line. If you look left, we do have support at that level as well. So one of the things we can do to kind of keep ourselves safe is to take our top line. Now, why does that keep us safe? Let me talk to you for a minute. That keeps us safe because it's mental. If we have a wider zone, then we're not thinking that price is breaking out the top. Sometimes those wicks will poke out of the top and we'll see like things like that happen, and it will kind of trick us to think that price is gonna buy again. And so what we wanna do is we wanna try to have the widest zone possible in the narrowest area, if that makes sense. I know that sounds a little bit like oxymoron, wide and narrow, but we wanna have, a fine-tuned area, narrow area, but we wanna have our zone as wide as possible so that we're not faked out by something that maybe pokes out with a wick or something like that, right? So we're gonna use the top of our volume candle, and we're gonna use the wick from our previous structure point. Now, we're just gonna let price come back to our zone and let's see what happens, right? So at this point, you're done and you're just waiting, okay? So here we go. Let's see what happens next. Price is now moving back in our direction. We see that price starts pushing up. Now we're getting closer, and we're in our zone. Now we're in our zone. We are in the zone at this point, and we should be looking for what price is gonna do. Now, obviously, if price starts going way, way up, we're not looking for sells. We're gonna have to readjust and reevaluate. Sometimes the best thing you can do is don't take a trade. Just reevaluate and kind of see where you're at and make sure that what you're looking at is what you thought you were looking at. Go back and reevaluate a little bit. But if you did your analysis properly, now we're in a zone, and we are looking to see, does the market give us a sell opportunity? But are we gonna do that on the 1 hour chart? No, we're gonna come down to the 15-minute chart, and we're gonna see that price has come into here. We don't really have a ton of volume. We have, you look at these big moves coming down, and look at how little they were coming up. Little bit of volume right here, but nothing much. Now we're in here and we're on the 15-minute chart, and we're looking to see, does price give us a sell entry? We're only looking for sells. So here's the thing. We are not going to just take a sell just because it breaks out of a zone to the downside. That's where a lot of traders make mistakes. What they do is they see a breakout and they just jump in. But what we're looking for specifically are entry candles. We're not looking for just any old candle that breaks out of the zone. We want to look for an entry candle, things like pin bars, things like engulfing candles, close below candles. We are looking for things like that that are gonna give us entry into the market that indicate an entry pattern, a candlestick pattern. I have a whole course called the Forex Order of Operations in my TGP, okay? So let's talk about that for a second. When you do math, you have to do, when you went to school, they taught you parentheses, exponents, multiplication, division, addition, subtraction. Some of you, I'm dating myself. I'm a little older than you. You Common Core folks might not know what I'm talking about. Bro, I'm over here dying. Gotta get some water. H2O. All right, so check it out. Now that I can breathe again. The PEMDAS, right, or the parentheses, exponents, multiplication, division, addition, subtraction, is what we call the mathematical order of operations. Well, Forex has one of those too, and I teach that in my class, all right? So what I want you to do, if you want to learn about that and how to have a perfect setup every single time, just go to my website, go to tradeandgetpaid.com, join up today, because we have over 90 course videos, over 90 courses. We have a dynamic community where everybody's communicating. We have trade setups that are winning over 90% for the whole year of 2023. Even with the markets going crazy, we won over 90% of our trades. Unbelievable, awesome. Okay, a downloadable content section, live classes every week. It is dynamic. Best decision you will make in your Forex journey is to join Trade and Get Paid. Go to tradeandgetpaid.com. I'll see you in there. All right, now back to these charts. When we have the order of operations, we are looking for our entry to come on a candlestick pattern. We're looking to come on a candlestick pattern, okay? So we're not looking for any entry. We're looking for a specific entry. Now, let's see what happens. We have price moving around in here. Now we have a little bit of volume right there. Now, let's talk about that. Should we enter? That's like an that's really not an engulfing because it had a previous bearish candle, but there's volume. Should we enter? Well, no, because it didn't break out of our zone. So we're asking for trouble, right? So we should wait, be patient. Now, we have this little breakout, but then it goes back in. So we're not looking to get in yet. Now, we have a little breakout. Nope, never mind. It goes back up. You see how we can be very patient and spare ourselves from the horror of getting in too early? Look what would have happened if we would have got in. We're going the wrong way now. All right, so we're in the zone. We're looking. We didn't like this zone because it didn't, this entry because it didn't break out. We see it push back to the upside. We get another little pin bar at the top there. That's a really nice point right there. Some of us would have decided to get in at that pin bar. We even have the 50% pullback. That would have been a really nice entry right there for the aggressive trader. If you are a scalper, you can get in there. Why? Because even though it didn't break out the bottom, you can look at this and understand that it's rejecting the top, right? So we're gonna get a push down here, all right? Now, for the more conservative trader, you wanna be more conservative and only trade with the trend like I told you. What we're gonna do is we're gonna wait for the breakout, okay? And so here we go, we get the breakout. We can get in at that point right there. So watch this. We get into the market and we put our stop loss behind our swing high or behind our structure. So let's go swing high, and we're gonna target down into here, right? So, but does that look like a good risk to reward for you? No, it really doesn't. It doesn't look very good. So here's a little pro tip. What we can do is we can wait. Instead of entering the market right here, what we can do is wait. And you see how this almost always happens. What we get is we get this little 50% entry, okay? And what happens is you can grab your fib when you have an engulfing candle or a close below candle. You go from the top to the bottom of it, just like that. And what you can do is you can see the 38 to the 50. Between the 38 and the 50 is gonna be your pullback entry. And so what you do is now, instead of entering on the breakout of that candle, what you're gonna do is you're gonna come back to that 50. You're gonna come back to that 50. Now you're using a much smaller stop loss. You can come to the 78. You can come to the 100 even and use that for a stop loss. And now what you can do is get rid of that. Now you have a much better entry point. Price comes in, we're in the market. We can come back to this area here, right in here, for a target, and we're still at a good risk to reward, 1.8, almost 2. So we're really good. For a scalp, a 1.8 is a really good risk to reward. So what we're gonna do is we're gonna enter the market, price goes pushing down, we're in profit, we're good to go. So our first entry is a win, we're happy, we're good to go. But now it's here, look at this time. It's 2 a.m., we haven't hit London yet, and we've already had a move. So what does that tell us? London might not give us what we want it to, or it might run. So it's up to us to be patient and let's see what happens next. So what I'm gonna do is I'm gonna show you the next entry. It actually happens during US session. So what we're gonna do is we're gonna jump forward to US session. So the next entry, the next really good, now we had a little something right here. And just to be clear, we don't want this because it's not engulfing. We don't want this because even though it broke out, we don't want that because it's not an entry candle. This could have been something, but I didn't like it because we had more black volume than yellow volume, although that did ended up winning. That's okay, we miss a trade sometimes. This right here was just a bunch of nonsense, and here we are, and now we're into the middle of the US session, and look what happens. We get us a nice engulfing candle. This is a close below candle. So what we're gonna do here is we're gonna move our zone, because now we have this close below. We're gonna move our zone down tighter, okay? We're gonna move our zone down tighter. And we're gonna see that we have an entry point right here. We get in the market right here. We put our stop loss back here. And now I wanna show you what happens next. Now I'm gonna move the screen so you can see it a little bit better. But look at this, look at this. If price breaks past here, I mean, this thing could run. Why? Because we had a high, a low, a lower high, and now we're gonna be pushing toward a lower low. So we could really see a nice run here. And where do we think we're gonna go? So we're gonna come here to the structure point, okay? And so let's come back and look where we are. So now that we looked left and we found our structure, so now what we're looking for is we're gonna see what price does, and let's see what goes on next. So price starts coming down, and you'll see here, look, price just drops. Price just starts dropping. Now we have our target. We have our target. But here's the thing. Look at this. Let's come back up to that 1 hour chart. When we look left on that 1 hour chart, look at where structure is. Look at where we see structure. I mean, we might potentially come running all the way down to here. Remember I told you that? But now we're not gonna count on that. But I'm just saying we already made a nice trade. We already made a beautiful trade and walked out of it with 30 pips, 28 pips. So what we're gonna do now is we're gonna let it run. We're gonna move our stop loss into profit. We're gonna make sure that price is in our favor. We're gonna make sure that our risk reward moves with us, and we're just gonna let the price run with our stop loss in profit. So now we have a London win and we have a US win. So we have two trades that come off of the same trade setup, and all we did was mark a zone. All we did was follow a trend. That's it. We did nothing except we recap, right? We saw that we have a downtrend. We let price come back to our zone. We took the momentum of the current trend. We let that sell momentum ride us down for a pre-London scalp. We let the noise that came through London happen. And then we waited for an engulfing candle, close below candle entry during the US session that gave us an additional day trade. So all we did here was we set this up, got two beautiful trades out of one zone, and it was simple. Just letting the momentum of the current trend take us in that direction. All right, guys, there you have it. That's the easy strategy number 2. Just a simple trend following strategy where we allow the momentum of the current trend to carry us in the direction toward the next lower low or higher high. That works bullish or bearish. It works on any pair. You need to go from the 1 hour to the 15-minute chart. 1 hour to 15 minutes. Some people like the 5 minute. I'm not gonna get into the 5 minute right now, on another strategy maybe, but 1 hour to the 15 minute, go in there, get your pips and get out, get away from being exposed to the market too long, and let the momentum carry you to profits. If this brought you value, hit that like button, comment, let me know if you have any questions, anything I can help fine tune for you, and make sure you subscribe so that we can push this out to more and more people. If you want to become a student, go to tradeandgetpaid.com. I'll see you in the community. God bless.